Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning, as usual, October 18th. And just as a heads up, if you want to go to cabotwealth.com, you can sign up for my free webinar next Tuesday, October 22nd. I'll be talking about, of course, the market, a couple stocks I like as we head into 2025. Now, as for the here and now, the last couple of weeks I think it's definitely seen the evidence improve. It's not some 1982, historic blast off or anything like that. But we're seeing a lot of the indexes that were kind of range bound and choppy. Now all of a sudden they're kind of getting, they're stretching their legs to the upside, maybe even, kissing new multi-month or all-time highs, kind of coming out above resistance a little bit. That's good. To me, the bigger story remains, and really has been since August, the action of individual stocks, especially growth stocks, but now it's financials, bull market stocks, industrials, even some interest rate sensitive stocks have bounced back. There's just been a lot of strength out there. The extended, or the names that got going in August, I'll say, have continued higher. And there's also been some other fresh breakouts, like I said, in a variety of areas. So in that sense, it's all to the good. I will say, I'm not one to kind of leave my brain at the door. A lot of these stocks have had good runs. We're heading into earnings season. Of course, we have the election in 3 weeks. I don't trade on that, but I'm sure there'll be some, big investors that are hedging or taking some profits or whatever. So it wouldn't surprise me. I'm not predicting this. It just wouldn't surprise me if, the next 2, 3, 4 weeks or whatever might be a little tricky. You still have the Middle East thing out there, some headline risk, interest rates. There's some, near-term sentiments elevated. There's something, a few flies in the ointment, but my point is I wouldn't be buying something that's 50 points above its 50-day line. But overall, I am bullish. We continue to kind of step into the market and really hold on to the things that are working, which is most important. In Cabot Growth Investors Model Portfolio, we've just continued to take nibble by nibble. We're about 20% in cash. Honestly, if we do get a little bit of a shake, we'll have to see how it acts. But if we do get a little bit of shake and some of these, real strong names that are extended pull in, not just for a day or two, but maybe a week or two, and find some support near moving averages, I do think that could be some interesting opportunities. But for now, I'm sort of focusing more on some of the fresher breakouts that have occurred here in the last 3 or 4 weeks. Okay, let's hop into the charts. As usual, I'm using a program called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. Just going to run through the indexes first, of course. So here's the NASDAQ. And again, this is kind of what I mean. It's not like the last 2 weeks have been, like I said, some sort of historic blast off, but it's just been kind of marching higher, ignoring some bad news. Of course, we had the dock workers strike, stuff like that a couple of weeks ago, 2 or 3 weeks ago. We are still, in the NASDAQ, for all the hubbub, we are still below where we were in mid-July. But I would say that this environment, and I'm not saying this as a bullish or bearish thing, I'm just saying it is what it is. Back here, the NASDAQ and the big cap indexes were going up, but it was literally like 20. I mean, it really was like 15, 20 stocks. It was, the rest of the market was just kind of sitting there. Back here, like the index isn't as strong, but there's way more stocks that look good. Now, that doesn't mean that the NASDAQ can't hit resistance, fall, and bring everything down with it. I'm just saying that as a descriptive point of view. Right now, either way, the intermediate term trend is, tilted up. It's above its moving averages, although there's still some overhead to chew through, okay? The S&P 500, just running through. The S&P 500 looks fine, and the New York Composite looks great. These are the two strongest indexes, clearly, just classic uptrends. We have seen like the mid caps, quote unquote, I'm not a big breakout guy in the indexes, but quote unquote breakout on the upside. We've seen small caps. This is the IWM, again, kind of like the NASDAQ, but sort of attacking that high. So whether there's a little pullback or whatever, but a couple of good days from here, it's hitting new, maybe all-time highs out of a 3.5-year structure. And then when you drill into some of the growth measures I look at, it's kind of the same thing. It's hard to see on this chart, but this is QQQE, the equal weight NASDAQ 100. The high back here was 90. Kind of hit 92 here. There's been a bunch of sort of 89 to 90 resistance areas. And now we're just kind of, again, sort of poking higher here. We'll see how it goes. IPO fund. Just, again, a measure of sort of risk-on sentiment. Here's kind of the old highs. And you can see it's finally kind of stretching its legs to the upside. Even if you look at like the IBD mutual fund index, kind of a messy chart. But this dark blue line is tracking real money mutual funds, growth funds. Again, here's your July high, early July high, actually. So just kind of testing the top of that range. Could this be a big double top and we fail? Sure, it's possible. I mean, it's, earnings season goes terribly from here and that sort of thing. But, you kind of have to see it to believe it. Just like, if I was seeing an index or, a bunch of these things down near the lows, you'd say, okay, there's some support here, but you still need to see the thing actually go up to turn bullish. Okay, so right now the odds favor higher prices down the road. I'm just going to get right into the stocks because there are a lot working right now. I'd say one of the things that's kind of interesting is we're seeing some, so far, and it's kind of early, some big liquid names. So these are, except for the names I watch, obviously that's what I watch closest during earnings season, but I also keep an eye on just other big liquid, sort of vaguely growthy or bull market type names, and if they're acting well, it can be good, for the market. So like today we have Netflix, which actually was, this was in top 10 last week as a setup if it gapped on earnings. So that looks pretty good today. I'm recording this late Friday morning, like I said, so we'll see where it closes. But, big liquid name up 10% on earnings with a big gap. By the way, this has a nice prior shakeout here, which is probably a good thing. But that's a pretty good sign. JP Morgan, I think this was last week. Again, not the biggest thing of all time, but reacted well to earnings. Obviously, that's kind of the lead dog in the financial space. Morgan Stanley. Again, this is not like my bailiwick per se. You can kind of see in the weekly chart, it's not the most dynamic name, of course. It's a giant financial name. But Morgan Stanley, reacting well to earnings here after already having a good run. Okay, that's a good sign. So you can see there's just, more than a few. Oh, I think also I'll just mention Intuitive Surgical today. Again, I'm recording this late Friday morning, so I'm not sure where it's going to close. But as I record this, kind of a nice, 8% pop on good volume. Does that guarantee the market's going higher or therefore earnings season is going to be a success? No, not necessarily. But like I said, when you're getting the big liquid names that the institutions traffic in to gap up, and not just gap up, but, let's see how it does in the days ahead. But, to act well, gap up, hit new highs, hold those levels, that's a good sign, okay? Elsewhere, there's just strength in a variety of names. So like in the medical field, here's Glaukos, kind of a nice setup in here. It's been what I guess you can say it's been a leader for a while, but it hasn't been like getting any headlines. It's not like, oh, geez, this is on CNBC. But you can see it's been doing fine, had a nice shakeout here, and now it's tightened up in here. It's trying to trigger kind of a breakout today. I don't want to say a breakout, but sort of a resumption pattern today. We'll see how it goes, but that looks pretty good. ALNY, ALNY. So biotech, I should probably back up. XBI, not to bounce around too much. XBI can it doesn't really trend with like tech, software, networking necessarily. Even though it's growth, it sort of dances to its own drummer a little bit. Some of that's interest rates, some of it's just, environment. But you can see it really hasn't done anything wrong. It's just been kind of consolidating in here, and now it's kind of catching a little bit of a wind. And I'm optimistic that at some point, the group will have a run here, another run. ALNY kind of shook out in here again. Kind of looks a little bit like that. I mean, it does and it doesn't, but it's kind of had this sort of choppy feel to it where, net from early July to early October, kind of like the NASDAQ, kind of like the market, didn't make any net progress. And now it's kind of letting loose on the upside here. There is some round number resistance, but looks pretty good. ARGX is a name, we've been following. I would just say on the weekly chart, we'll see what happens. But you kind of have this Jugunda, base on the weekly chart. More important to me is I think this was 12 or 13 weeks up in a row. I want to say 12, most of which on above average volume. And it's kind of hard to see. You're probably squinting at the chart saying, wait, what's it doing? Well, that's the whole point. It's just been very tight here the last 2 or 3 months. On the daily chart, it kind of hacks around, but we're talking between 500 and 550, so it's kind of a 10% range. Okay, obviously you're looking for some decisive strength on this. This does have earnings coming out on Halloween, so we'll see how it goes. I mentioned some of the bull market stocks, but Blackstone's sort of another one. This was a longer term. This is BX, of course, kind of the granddaddy. This was kind of a longer term. This is the monthly chart, which I'm not a huge, it's a cup with handle on the monthly chart. Well, I mean, I don't think people really trade on that. But with that said, it was kind of a big, long base, started to stretch its legs, hit new highs. And after one more tough pullback with interest rates, you can see this is the 10-year note. You can see how it's risen here recently. It's kind of hacked around here in recent days. That sort of drew in, Blackstone, which has a lot of real estate exposure, but did nothing wrong. And now it's just gone vertical. Obviously, this is another big liquid name on earnings, stretching higher. So it looks good. But elsewhere in the bull market space, like Evercore looks great. Just kind of an M&A advisory firm, EVR. I mean, there's just a lot of stocks that look good. you're not in the first inning with a lot of these things. It's not like they just broke out powerfully like last November. But, and this one does have earnings next week, just FYI, October 23rd, but just showing you the strength in the name. And even something like a Robinhood, which had this, it looked great in here. It looked great back here, but the market wasn't ready. It was a narrow rally. Then we had the summer correction, yada, yada, yada. Okay, but just has basically etched out this big, long consolidation for a few months, breaking out on the upside. So far, so good. This is one of these fresher breakouts. Could it fail? Of course, everything could fail, but so far, so good on that front. Obviously, we're starting to see some of the AI names kind of reassert themselves, but as you'd expect, it's definitely more selective. So what happened this week was, not to go on a tangent, but ASML, which isn't really AI per se. I mean, it sort of is, but it's just chip equipment. They got blasted on earnings. It came out a day early. It's a whole story, but they got blasted. That hit the chip equipment group. You can see like Applied Materials, for instance, kind of got hit in here. But there are a lot of names that look good in what I would say the AI and sort of the, quote, newer networking space. Okay, so Taiwan Semi gapped up on earnings. Looks pretty good. Even on the weekly chart, it never really got hit nearly as bad as the group. Held the 200-day line. Kind of a nice base now out to new highs. We've mentioned Coherent before. This is one of these things where, I think some of the money is going to start moving into like the networking. Arista Networks has been one, but Coherent looks pretty good. It was downgraded this morning. We'll see how it closes, but so far it looks totally normal. It's not even to the 25-day lines way down here. But you can just see a nice breakout here recently, a nice run. We'll see how that goes. But even something like Lumentum, LITE, again on the weekly chart, you kind of have these, I want to say bottoming bases, but they've been kind of consolidating here for a while after a big decline, obviously, the prior couple of years. Business is kind of iffy here, but, supposed to be turning around, so we'll see. Coherence numbers look a little bit better, but again, acting well. And there's a few of them like this too, okay? Just wrapping it up, there's a few other just random names like Boot Barn. Again, this one's had a pretty good run. You're not in the first inning per se. The breakout was probably something like back here. But acts totally well, recently raised guidance, does have earnings next week, FYI, on the 23rd. But you can just see this nice four-week consolidation in here as the moving averages kind of catch up. So kind of an interesting setup heading into earnings. Mercado Libre, I mentioned this in the CGI, and I didn't get any hate mail. It's a $2,000 stock, so I know that's not everyone's cup of tea. But it really does look, good. I mean, a lot of things look good, but nice base in here. By the way, it's a $100 billion market cap, very liquid. It's a real company. But Latin American payments and e-commerce and all that sort of thing. And it's just kind of trying to bounce here off the 50-day line. We'll see how it goes here, but just kind of an interesting setup, especially if it kind of resumes to the upside. And then just, bigger picture here, I just mentioned two sort of, quote, funds. This is IWM, which we've mentioned. And let me blow up the chart here. Yeah, so this is a monthly chart. You can just see for all the talk about, bull market, and it is a bull market, but just, small cap stocks have not gone anywhere since early 2021. So, I mean, we're getting on almost, 4 years, right? 3.5, 4 years. So, if we can kind of confirm on the upside, I'm not a huge breakout player in the major indexes, so to speak, but there's no question that it's acting well. And maybe with the Fed cutting rates, the environment's there. And then last but not least is Bitcoin. This is IBIT, which is the fund that actually owns Bitcoin. So the history isn't on here. It just started trading. But, Bitcoin itself is kind of like this. Okay, so it had a huge run. And you kind of have a little bit of a classic, 3 waves down in here. Multi-month, this is a weekly chart going on for months. So if the risk-on activity's there, Fed's cutting rates, the election doesn't cause the country to, implode in fire or whatever, I do think stuff like Bitcoin could confirm on the upside. Not, of course, not the core of my methodology, but just looking at the chart, my guess is Bitcoin and some of the plays related to Bitcoin could probably do well. Okay, back to the market. Like I said, I'm pretty bullish. We're making some money if you've been buying, own some of these strong stocks. It's exciting. Again, we do have the election coming up just on the chart, just to put it in perspective. It's like right here, okay? So it's not that far away is when the election is. You still have Israel, you have elevated sentiment, you have the higher treasury rates. So there are some potential flies in the ointment. And oh, by the way, you still have some of these old liquid leaders, kind of battling with the resistance, the NASDAQ, even the NASDAQ 100 itself, QQQ, right? 500 level has been kind of a wall that's been a little bit tough to get through here for a while. So, I'm not ruling out something changing or whatever. That's why we'd be picking your spots and your entry points somewhat carefully. Wouldn't just be chasing things higher. But overall, at the end of the day, you have to go with the evidence. There's no question the intermediate term trend is up, long-term trend is up, the broad market's healthy, and most important, like I said at the outset, there's just a lot of individual stocks that are strong, have been acting well and following through the upside, and we're still seeing some fresh breakouts, even among some of those big liquid names, like I mentioned earlier, so far in earnings season. So overall optimistic, looking to put money to work, but with a little bit of a discerning eye too. Okay, that's all I have for this week. Be sure to come by again next week for another Cabot Weekly Review.